Hello everyone, am I audible? Hoping that we've gone live. Hello everyone, am I audible? Okay, sorry for the delay. Yes. Hey, hi Padma, nice to see you join the session. Hello, hope you're doing good. Yeah, okay. Sorry, there had been delay. Again, as I said, there was some network issue. We couldn't connect properly. Well, we are here now. Anytime. Hey, Geeta, I see you also. So the few people who are joining, welcome all of you. Thanks for attending this session. And, of course, we're going to be going ahead and deep dive and understand various different aspects. But before that, it's amazing to see you all on a Sunday afternoon. I'm sure you have a lot of other things going on. And here we are with a live session. Let me assure you that it's not going to be a boring, session of Sunday. It's going to be a very interesting one because I have all the different, ideas out there, how a funding can help you in understanding and how you can be a corporate professional and aid the company in a better manner, right? Hi, Geeta. I saw you chat. Just a second, guys. Before we go ahead, let me tell you that you can put out your thoughts. If you have any questions, put it in the chat section. Meanwhile, if for some reason, if I'm not able to access any of your chats, if I've not answered any of your questions, you can always put it in the comment section so that accordingly I can see you around, right? Awesome, and we can revert to you back. Well, we are here today. What is the entire purpose of having this session, right? Well, as I said, I'm a little simple person. I always like to understand things in a very simple manner. So, hence, I always try my best possible way to make any of the, most complex topics to be in a simple and a easy understanding, right? I'll tell you why this happens. See, when you are as a professional, you go through a lot of stages, okay? A stages of not understanding certain things in a right way, or there are times when we all have got frustrated at a stage where like, hey, you know what? This topic seems very difficult. What is a way out for this? Is it something that I can, kind of resort myself and get into a proper understanding? Yes, certain questions like this do come into picture, but don't get distorted by that. Don't get demotivated by that. Here we actually are here for you guys, only to help you and make your life easier, because we are day in and day out doing this, and it'll be we are here to make it more simple. That's what I can say, right? Okay. Before of course, we've lost almost 10-15 minutes, so without wasting much time, let's deep dive. As I said, I always start with this, right? It's like, you know what, when you're starting or even seeing something, you should know what is something that you're expecting, or for that matter, what is something that you can expect from this particular session. I'm going to like categorize the expectations of you into four categories. The first is that we're going to be deep diving and understanding how the entire syllabus is being categorized into. So that's one. And the second one is we will be telling you, or for that matter, I'll especially be telling you why ICSI wants you to learn this subject. What is the relevance of this subject, right? And the third being that, of course, it's a breaking down of few important chapters, the topics, and how the entire scenario of the corporate funding is, or for that matter, listing or an IPO is useful for you as a CS professional. And last but not the least is we're going to be talking about what you can expect from our live classes, which we will be taking up at a later stage, right? So that's all in all is the four expectations that you can have. I'm going to be trying to be a little more systematic here. Will be, kind of allocate a little amount of time for each of these four. And any given point of time, if you have questions, please shout out. So that's a request I'll make to all of you. Well, without wasting much time, let's deep dive. First thing, what is something that the syllabus is talking to you, right? As far as I remember, this is module 3, paper 7. Again, I'm stressing on module 3, paper 7. Of course, you have two other, I'm sure, open books for this particular module. Let me tell you, open books are easy to fetch good marks. Actually, I remember, I guess one of my students was also asking, hey, what is, ma'am, what is something that, I should do in an open book? I say, select the open book module because it's very easy to crack. I'll tell you why is because, the approach is something that you need to be very careful about open book, nothing else, right? So if you are well versed with the other two open books, the only subject that you have, right? Okay, two other open book exams, yeah, correct. So the only subject that you have to study in the module 3 properly is the corporate funding and listing, which we're going to be talking about today. Why I tell you that this particular thing is important? Well, even before that, the categorization that we were supposed to be speaking, the part one is mostly about corporate funding, which is for 60 marks, if I'm not wrong. And part two, which is the listing and listing whatever the related topics of it, is for 40 marks, right? If you have seen my previous video, or the live session that I did about secretarial audit, compliance management, due diligence syllabus or a topic, what we did is I told you that, how was that, we spoke about the magic number and super number, right? I'm going to be stressing you, magic number is that 40 marks that we will all struggle to get, right? And 60, that is the super number, is something that you should be aiming at, and that is what I tell my students to do. The reason is, I'm sure taking 40 also sometimes becomes really difficult. I've been through it. So don't worry. It's not that I'm just going to be coming and telling you, hey, you know what, you should take 60. I know what is the kind of hardships which goes in to even get that 40, right? But the aim is to do the super number, right? Worst case, you will still end up 50, which is far beyond than 40. Well, you should be wondering, ma'am, why are you just kind of like telling us, stressing more about numbers, more about the marks? Don't you think we should be concentrating more on the subjects, learning the subject and topic, right? But well, I'll tell you what. See, it goes beyond as a cycle, and I keep telling everyone. There were a lot of fears when I was studying. Few of my friends were there, and of course, it was some like more like a combined effort, which we used to look at, right? But what happened was, of course, I don't say, and I don't have any shame denying this, that there were few people who were very well versed with the topics, and even for that matter, every section of the law. But at the end of the day, what becomes really, really important is that, it becomes like, how do I put it? That, clearing and then practically putting whatever the knowledge that you've acquired becomes important. So that's the reason I keep telling everyone is that, see, the aim is for you, any attempt you're giving, guys. Again, I'm stressing on any attempt you're giving, the aim of you is to be clearing that exam for that particular first time whenever you're writing that paper. I'll tell you why, right? First, when you clear or when you have a strategic approach, your frustration levels comes down. It's like, we had this one person. He was actually pursuing his LLB and CS together. He was my very good friend. So what he did was he took an approach of giving only one group at a time because he had to manage even his LLB. He had to manage even the CS, right? And he took this very systematic approach. And then meanwhile, when people were like giving all three groups, really doing full time, CS and still not being able to clear it, this person systematically gave one group, concentrated on that only three subjects, and then clear. Well, I say if you have time, go for the two groups or three groups if you're comfortable. But what am I saying is we have a very systematic approach. So that's where the division of the syllabus comes into picture, guys. I'll tell you again, I stress the 60 marks, 40 marks is what I tell is very important. Coming especially to part two, even before I go to part one, I'll tell you why part two is important and easy. As far as I know, there are about five chapters in part 2 in the listing. And the last two parts, which is for the preparation of an IPO and their related documentation and procedures, that is only, I have read it, that is only for the information purpose for students to read it. So if I understand it properly, and I'm going to get more clarity on this, but what I understood reading by that is this thing will not be given to you in the exam. So which means ideally you will be left with 3 chapters for 40 marks. Guys, again, I'm stressing on this is a strategy that you need to be looking at, right? Because 3 chapters, 40 marks, nothing good like that. Again, I'm stressing on limited chapters, that marks, the hitting the magic number is what you should be aiming at. Well, coming to the part 1, which is corporate funding, that is 60 marks. Again, I'm saying it's not a, if you understand certain topics, and I'll tell you, I assure and give it to you, I've done corporate funding day in and day out in my life, handled equity, have handled debt financing for that matter. I structure the transactions now. So what I can say you is that, this particular topics is so interesting that it's kind of like, so related to what's happening in Iran. If at all you just take up an Economic Times kind of read, hey, you know what, this startup got this much of funding, they raised so much of funding, maybe 10 million from these, angel investors, or for that matter, from the venture capital funds. What are these? This is what we're going to be studying in part 1, right? So part 1, we'll study mostly about corporate funding, coming for 60 marks. Yes, there are a few very different new topics which has come, and of course they're going to be concentrating more on first 2 or 3 chapters will be mostly upon the listing regulations, the requirement for the listing, and what are the SEBI talking about raising different capitals. Everything is what is mentioned. Then we have a conceptual understanding about what a private equity is, what a venture capital fund is, what an angel investor is, everything like this. So that's about part 1, part 2, which is 60 marks and 40 marks respectively. Again, I'm stressing on always remember any particular part which has limited, subjects or limited chapters and a good number of marks like 40, 50 marks is a bonus hitting, part for you. So try concentrating more on that, is because there could be high possibility that you will be clearing in the first attempt or whenever the attempt that you're giving from now on, right? Awesome. So now that we have understood the syllabus understanding, if at all you think, guys, I'm going a little fast, sorry, I have this habit of talking a little fast. If at all you think I'm going a little fast, let me know, put out the thoughts in your chat section. Otherwise, I'll continue with this phase, right? You can just let me know. I'm going to just wait for like a second or two. If otherwise, I'll just slow it down if you want, or otherwise, I'll go with the same phase which I'm going. Okay, cool, fine. It's not that fast. That's what Padma says. So we're going to stick in to this particular, pace of my voice. Any given point of time, if there's an audible, if you are finding any sort of a trouble in the sounds and everything, please put out the thoughts in your chat section. I'll try fixing that. Yeah, awesome, guys. So today what we're going to be learning, the first part, as I promised, we understood the syllabus analysis or the division of based upon the weightage of marks which is given to the each parts, right? Now let's move ahead and understand why ICSI wants you to learn this subject. If at all, I'll have to tell you, not that I want to say it in this way, but see, it's my personal experience and I've seen a lot of my friends experiencing this. I started my internship, I started my entire CS career with a startup, right? And this happened to be that I understood how important is capital. And joining a startup made me understand. I thankfully I had an access to a lot of information and the things which were happening around in the company. So which kind of gave me an outlook of how much important is it for us as a CS to understand the different types of financing. Okay, let me tell you, let me just give you an example right here. A company starts, it wants funds. Company wants to grow, it wants funds. And company wants to get into a new venture, it wants funds. So at the end, even for that matter, when it wants to close down, it still needs funds. So a company from the incorporation to the exit stage, not the exist, sorry, exit stage, everywhere the cycle runs that the fund is required. And where do we acquire this fund? This is what we're going to be learning in part one, which is the corporate funding. This could be by the way of equity. This could be by the way of debt financing. That's a broad category I'm putting. Of course, there are various, instruments which gets raised, you know, under equity, or for that matter, even debt. But we'll come to that at a later stage, right? So, what is the objective, right? What is the objective of ICSI Institute in the head of them? That hey, you know what? Why students have to learn about this subject? See, as I said, every company wants funds. And CS is that particular person who is a governance professional, right? He's that person at a later stage. I'll tell you what, be it equity funding, let's take an example. Be it equity funding. Secretarial team acts as a real facilitator in the equity funding. Why is that? Is because to get a money, to get any sort of a capital into the company, who structures the capital, who increases the share capital, who does the filings, and who makes the entire shareholder share subscription agreements, and who is the one who takes care of the kind of requirements of having the meetings, calling for the meeting, filing the respective forms, the entire process. I'm just giving you an overview. Of course, there goes a lot in this entire thing, but this is an overview. So who does all this? It is the CS who does all this. It is the secretarial team of the company which does this. So don't you think it becomes so important for us to know about the different types of finances which exist in the company, or which a company can raise the capital from the market? Yes. So that is why they have given this subject to you. Is that going forward in future, if you go to a company, be it equity funding, be it debt funding, you're that one person they will come to, irrespective of whatever the funding which is happening, is because you are to be thorough with the conceptual and also the legal framework of this different funding sources. So with that as an objective, why have they given the listing, right? Why have they given the listing process and different other listing regulations and compliances associated with the listing to you? Well, of course, SEBI, right? SEBI is the biggest regulatory body in India, recognizes CS as a compliance officers. Why would they do that? Is because that's the kind of onus, that's the kind of responsibility that they want to give on us. So with that responsibility, don't you think we should be able to understand how a company, even for that matter, simple understanding, right? How a company goes and gets its securities listed, right? And then if listed, what are the compliances associated with such listing of the securities? And what is that regular compliances associated? Even for that matter, do we have to have certain pre-requirements to get into a listing? All this is what mentioned in listing, right? I'll tell you why corporate funding and listing is very connected to each other. See, when a company starts, it is very small, and when the company goes big, I'm sure you've been hearing of various IPOs happening in the market recently. That could be like, for that matter, there's this rail tech which is going IPO, and then there's a lot of companies which is going into IPO. So why are these companies going to IPOs? Is because they want to enter the market, they want to raise more funds, right? So again, as I said, listing also goes back and connects to funding. So hence they've given corporate funding and listing together, and that's the reason the subject has been given. In order to like summarize it for you, why have they given, why the ICSI wants you to learn this particular subject, and how relevant is it for in a practical scenario? I'm the best example, guys. I want to say you this. I'll tell you why. Is because when I went, so I have done the cycle of equity and debt funding in the in my career. When I went and I started my internship out, initially, I was given due diligence. So due diligence was something that was more like, understanding the structures, material contracts, giving out the data, trying answering the questions of the investors who are trying to bring in the money to our company, everything like this, right? And then later, I got into this exact funding, process where I tried understanding how a different CCPS gets issued, how equity shares gets issued, what actually, see, I'll tell you what, practical understanding is different. Of course, you will learn it in when you go to internship or for that matter, when you work. But having a base is very important. Thankfully, I had a base from ICSI Institute, but though I'm again stressing on the syllabus that I have read did not really talk much about funding as a whole like this, how you have been given an advantage to, right? So hence, when I started out, I understood, hey, you know what? I knew preference shares, I knew equity shares, I knew how the things and procedures would go. But I tried understanding how a different scenarios work. I understood about bonus shares, I understood about ESOPs. This could be a little part of equity, which I understood. Then there comes a time when the company wanted to raise debt funds. So it could be for that matter NCDs or commercial papers. That also I understood, right? That somewhere the cycle of the funding had happened, and I've kind of understood that in my career so far. So that's the reason I'm telling you guys, you never know, you might go to a startup in future, or for that matter you might join a firm like mine, which is an NBFC or a banking institution, where day in and day out there will be a debt funds which will be raised. It could be by the way of NCDs, it could be by the way of commercial papers, it could be by the way of bonds. So this happens in a day in, day out. So who is the person who will be responsible for structuring, or for that matter, understanding the compliances, giving an advice to the board or giving an advice to your team? That will be you guys. Again, I'm stressing on it is the kind of onus or the responsibility the the regulatory bodies today have given on us. Hence, it becomes totally imperative, very important for us to understand this, right? So that's a little bit of background why this particular subject is given to us. So what we understood so far, we understood the division of syllabus. We've understood what? We've understood the kind of way how this entire structure of the syllabus and why it is given to us and how important it is to us as CS professionals. Awesome. So next is where the part of why or the breaking down of the syllabus entirely for you, right? Not sure how to go about. You let me know if you're comfortable. I'll go with a little bit of slides, just get you like a little bit, kind of decked up for it. Or for that matter, we can go, like, how do I say, chapter wise. But it's up to you. You decide what you want to have. Um, I'm more happy to take it the way you want. Otherwise, I'm just planning to give a little bit of an overview and then take you how each of the topics are connected and then give you a brief description. If that's okay, let me know. I'll start in that way, right? Anything is okay. See, again, as I said, it's the flexibility that we have of, which should be incorporating to the needs of you, is because you are today investing some amount of time, you should be getting something out of it. So that's what I aim at, right? Awesome. Um, just a second. Okay, cool. Fine. Chapter wise is okay for Padma. Okay. So before we go chapter wise, as I said, I'm going to give a little brief summary wise thing of you to understand, because I'll tell you what, chapter wise is nice, which I'm going to definitely do for sure. I'm going to share my screen and tell you guys why, how different things are related and why it is important and everything. But also, meanwhile, let's understand why this particular entire syllabus as a whole is important, right? Or for that matter, why is this, how is this entire syllabus structured? Okay, let me just give you an example here. Let's take there is a company A, okay? It wants to start a sweet business, right? and they want to get into a sweet business, and they're based out in Bangalore. Let's assume that, okay? And then company A wanting to start a sweet business in Bangalore is now have an idea. Okay. So the idea is what? The idea is to start a sweet business. Okay. So now, in order to do that, they require funds, isn't it? They require funds to be incorporated as an institution. It could be whether we have company, or for that matter, LLP, or for that matter, even a sole proprietor has a sole proprietorship form. They would want some company to have a legal existence, right? So that's one. Imagine there's a company A, as I told, they want to start this business and they want to incur some expenses because they want to incorporate this entity. Later, in order to manufacture sweets, there comes a time when they want to understand what actually is really important here. Like, how would they raise that more money? Like, assume for an initial 6 months of time, on an average, the working capital, like every month recurring expenses, would come up to 20,000 every month. So for 6 months, how much is it? Six twos are 12, right? So that's about 1,20,000 for 6 months of capital that they need. Now, company A owner, let's assume he is Raja. Okay. So Raja now just thinks that, hey, you know what? I've calculated that I need this 1,20,000 for me to just, get this business started. But how would Raja raise the funds now, right? Maybe, so that is where the process of funding starts. So this is again, I'm stressing you guys, this is where the process of funding starts. And again, I'm stressing on this funding process is very, very, very common in the real life. It's just that we are not seeing it. Okay. All this topic that we're going to be discussing in this entire, syllabus as a whole, something or the other could be related to you, except of course not something like foreign convertible bonds, or for that matter FCEBs or ADRs or GDRs, which is of course not very common in the real life scenarios, but most of it can be related, like term loans and everything. Now, coming back to our example of Raja, Raja is the person who wants to have this sweet business, right? And he has understood he wants for 6 months 1,20,000 a month. So who's going to give you this 1,20,000 a month to Raja? See, he can start with the concept of bootstrapping. What is this bootstrapping? Bootstrapping is something where you are giving your own funds to your business. So, out of the savings that is there with you. Okay. So, in that way, Raja either has a plan to take certain savings out of his, like I say, take certain money out of his savings, and also he can even kind of approach these people called angel investors. So, who are these angel investors or accelerators? These are the people who will help you get that initial amount of funding based on the business acumen and based on the business understanding that they have. Okay. So, Raja is what now? Raja, before even the angel investor, there comes a stage where he can even approach family and friends. So he has three options in front of him, guys. This could be by using certain amount from his own savings, which is called bootstrapping. Then he can go and go to this angel investors who are good high net worth individuals who can get the money to him, or he could go to his family and friends to get the money. So what common thing a people or any normal person or in a startup culture, what it happens is they go to the family and friends at an initial stage and they do a bootstrapping, right? When the investment is not so much that they want for the company to be starting up, considering 1,20,000 for a Raja is not that big of an amount. Imagine, suppose he took about 80,000 from his savings and he wants that another 40,000, which he takes from his family and friends. So that's about a pre-seed stage, right? It's like even before the seed of having an idea and starting a business is what he has acquired to just start a business as the pre-seed stage. Then comes a scenario when Raja has done pretty well in the first 4 months. He has certain amount of money left out after the expenses that he is incurring. Imagine he has about 40,000 of the amount left out, right? After 6 months, he has 40,000 after putting out all the expenses. So now he has an idea. So because that recurring expenses is the same, or it could be a little, changing maybe about 2 to 3,000 extra. Assume, let's take an assumption, it will remain the same for another 6 months. Now, in order to run the business, he only has 40,000, and how much he wants again? Out of 1,20,000, 40,000, 80,000 he wants, because he has already approached his friends and family. He can show the kind of profit he's making and the kind he can pitch his business, right? He can pitch his business now to the angel investors and get the sourcing of funds. So again, I'm stressing you guys, see, this is where the sourcing of funds come into picture. I'm sure this could have happened to you also in the real life, right? You would have gone somewhere and there comes a situation that, what will happen, that today, hey, what, I might be in some need of some money. Maybe I want a lag. And what I do is some amount would be there with me. And what I do is I probably ask my friends and family who can help me out, who can lend me our money. So this is exactly similar to that, guys. It's just that at this stage, my purpose would be for myself. I would have gone into some trouble, or I would have wanting to pay some person off. That's the reason I would be asking the money. Well, also on the other hand, there would be people who would be asking money for the different purposes, right? So in this case, Raja now took 80,000 from an angel investor. He approached his desk. Angel investor saw potential in the business of him. He took the money, right? So the money that comes in could be by the way of equity or by the way of debt. He could have even given the loan to Raja, or for that matter, he could have given in equity, like a share in the business of the company. So again, it's the complete sole, decision of Raja to give him the rights in the company of him by issuing the shares and then taking a fund, or for that matter, just taking a loan from the angel investor. As I said, this is again the decision of Raja. Let's not go into that. Okay. So assume he raised an equity, he increased his share capital, he got his dilution. First, he had about, let's take an example, 75%, 25% of the share, where he had invested 75% and 25% was invested by them. Later, now the dilution happens to be that, he's giving a 10% of his shares for an angel investor to come and invest in his company. Now, what happens? He runs the business, and after a year or a half, he is almost doing pretty well and he wants more money to run his business. Now, he could either go and approach big institution or a bigger angel investors, or for that matter, there's this called people called venture capitalists, or these are the institutions. They're like, a group of specialized institutions who can address your capital raise concerns. Okay. So again, as I said, it could be Raja, whatever he can decide, he goes into that, he raises even more money, and this goes on and on and on. I'll tell you what, when this is happening, right? In a technical words, we can say pre-seed stage, seed stage, and then series, and series A, series B, series C, and later on and on. Then comes a stage when Raja has done pretty awesome, and maybe he's in market for almost 5 to 6 years now. He has a good revenues. He wants to expand his business. Maybe he has expanded in 2 or 3 cities. He wants to do that more. He wants to have this. He has the aim of doing this for a very long time. That's the emotion that he's going through. In order to do that, and you want to raise more capital, there can be a stage where he goes and gets his shares to the public. So this process of going to public is called an IPO. I'm sure you have understood a little bit about it in any of your executive syllabus, but this is a process where exactly an investor, or so not an investor, how a founder of a startup or how a founder of a company goes public, right? As I said, this is again a stage, right? This is like a pre-seed, seed, a series A, B, C, go on, and then an IPO. So this is exactly how a life cycle of a company in terms of a funding looks. Of course, in between, there could be a times when debt financing comes into picture in order to incorporate the regular needs of the company, like working capital, OD. cash credit, or for that matter, any small instrument which we can raise and we can, pay off our bills or pay off the expenses, then again pay them off. So all this is definitely a part of the deal, but then this is how the structure is going on, right? Then there, even if he wants to take a step ahead, Raja's business, he can get his shares listed in the stock exchanges of different other countries like Nasdaq, even for that matter, London Stock Exchange or various other places. In that is when, so the process of issuing the shares or getting the shares listed, right, in the stock exchange of another company, the way how we do it is by issuing ADRs, which is American Depository Receipts, or for that matter, Global Depository Receipts, which is the GDRs. Sorry. So that is how the process runs. Okay, Raja has done pretty well in the last 5 or 6 years, right? Raja was just a small person who wanted to do the business for 1,20,000 for 6 months, recurring expenses. Now, can you believe that he's going and listing his shares in Nasdaq, like America? Like, I don't know, like that's like a good thing for him to be doing, right? So that's the growth which a people or a potential of the company can be done. Of course, there are people like companies like Infosys, Wipro, or for that matter, various other HDFC company, HDFC Bank, sorry, HDFC Bank, various other companies which goes on and have listed their shares in the global markets. That we're going to be definitely studying in depth in the syllabus. So this is how the funding process works, guys, right? So this is entirely the summarization that I wanted to give about the how an entire syllabus is worked out. So without wasting much time, let's go a little chapter wise thing. Definitely not going to bore you down with telling exactly why every chapter is there, what is the entire understanding, why you have to be doing all that. But as I said, keep all these things that I've told you in your mind when you're going and kind of approaching the subject, because that's the way of an approach that you would be wanting. And without wasting much time, I'm just going to share my screen and let's start out our chapter-wise analysis, right? We're not going to stick too much of an in-depth. We're just going to hardly spend like a minute or two. I'm just going to give you a little brief understanding about how what each chapter tells you about, and then we will close this and then we can move to our next part, right? Awesome. So I am just going to be sharing my screen. Meanwhile, if you have any questions, put out in your chat section. More happy to take it. And if at all you've been clear about what I've explained so far, let me know that you're clear. Or if you want me to touch few topics in detail, we can do that as well, right? Just let me know how to go about. Accordingly, we can take that out. Yeah. As I said, if you have any questions, please let me know. More happy to take it. Guys, are you finding any problems in any of the things? In any of understanding any of the, how are you feeling about this subject? It's clear? Okay, awesome. I'm glad that it's clear for you guys. 1 second. Sorry, for some reason. 1 second. Okay, so we have it now, right? I'm just going to share application window. Okay. Okay. Let me know if my screen is visible and if you want me to zoom. As we've discussed, it's a module 3, paper 7 subject. Okay. And 1 second. Sorry. Yeah. Okay. So it's a module 3, paper 7. See, this is what we discussed, right? If at all you understand, this is what we discussed. I talked about long term and the source of fund, the different sort of debentures, preference share capital, the kind of way how we can use it, funding, debt funding, equity funding, foreign funding, other commercial tools, right? Listing, what we discussed, how a particular thing can go. It could be the way of Indian listing or international listing if you want to list it, your shares in the market of another. Now let's understand detailed contents. Okay. Um, I'm not really sure how to. Just 1 second. Okay. Cool. Yeah. Okay. With the growth of a company, form of an organization in India, the demand for equity capital gains steam. Right. So this is what they're going to be talking about: Indian equity public funding. So the first example what I gave you is, in order to run a company, you would want certain, capital, right? So that could be by the way of equity, or it could be by the way of doing a preference share capital, anything for that matter. And the different process which gets involved is this initial public offer. As I said, it is the first time you go public. And the next time, when if you want to issue a further more shares and raise more capital from public, is will be the further public offer. Private placement, I'm sure you're aware of, it will be the selected individuals of people whom you're going and approaching. Right issue is for the existing investor. If you want to go and raise more money at a reasonable amount of price and everything. So that's a little bit about it. And the reason why they want to understand or want you to understand is, as I said, if you are understanding the entire syllabus as a whole, please understand there will be a term of two, which is the conceptual understanding and the legal framework, right? And this is what is the aim of, institution or institute as a whole, is because they want also you to understand what a private equity, what a private placement, what an IPO is, and also on the other hand, understand the various regulations associated with it. So this is where the SEBI guidelines comes into picture. Different other guidelines of issuance of an NCD comes into picture. So that's a little bit about the first chapter. Now let's understand what a real estate investment trust is. Why would they want to know? I'm sure I don't know to what extent if you guys are aware of this. This is a very new concept. I'll tell you what, it's like this is a very similar sort of a form of a mutual fund. It'll be the way how this particular thing as a fund will be incorporated is very similar to mutual funds. What they do is this: there will be a trust which gets formed called Real Estate Investment Trust. And what they do is they make a collective investment in the commercial real estate. Okay. So the commercial real estate is something which is like how I'll give you an example. Um, I don't know to what extent. Have you guys heard of WeWork, a space where there is a common office spaces? Of that matter, big companies have a very much a big space like commercial real estate, right? So those are the real estates, and these trusts invest. Okay, the investors invest in these trusts and get the get their interest or get their sort of a return on the capital from these trusts. So this is a very amazing, interesting topic. It's a very simple thing. If I have to give you an example in a simple manner, imagine today if I want to invest in a real estate investment trust, what I would have to know is different sort of a commercial real estate but that particular trust is investing. I will pull in certain money. So this particular trust pools maybe about 100 crores of money. They will invest in certain commercial real estate. Then they'll whatever the rental income that is coming or the various other different incomes that is coming out of that real estate, they will again go and pull back it to us as an investor because we are the one who gave them. So they're like ideally the intermediaries who collect the money from the investor who invest in the real estate. It's like a very simple example, right? See, we cannot go and invest in a big corporates or big commercial real estates because we don't have so much money. So these are the trust who acts like a middleman and between an investor, between the bigger commercial real estates, and then they try managing the funds. So that's another source of funding, guys. Again, then comes an infrastructure investment trust. What is this? This is a very new concept. Yeah, as I told, it's similar to a mutual fund again, which enables the direct investment of a small amount of money from a possible individual or institutional investor in infrastructure to earn a small portion of income as a return. Okay, again, as I said, here it is similar to mutual fund. There will be a trust in one hand. There will be, see, similar to the real estate, there was real estate. Here, there will be infrastructures. What is this infrastructures? That could be by the way of infrastructures in a big, for that matter, like big buildings, or it could be by the way of putting it in highways. So various infrastructure activities for government or various other people will be taken care of, right? So individual investors, institutional investors pool the money to these trust, and then the trust further funds it to what? Further funds it to invest infrastructure activities. So whatever the money that is getting from these activities, they will pool back to the individual institutional investors. Okay. So that is how they earn a small portion of income. Awesome. Next, as I said, it's a private equity. I don't know to what extent. It's very similar what we've learned, that is venture capital angel investors. So these are those people who are not a part of a public at large or who are not banks. These are the people who are private people who wants to fund companies, who wants to, give the companies a fair amount of chance to survive in the business. This could be, as I said, could be venture capitals, could be even VCF, which is venture capital funds. There are various different regulations associated as per SEBI with them, and angel investors, and they have a different category of them. So all that we will be studying at a later stage, right? Awesome. Indian equity non-fund based. Okay. I don't know to what extent, if you guys are aware of, the concept of equity and the concept of non-fund based is there. I'll tell you how this particular thing works out. There is this concept of fund based. What is this fund based? A fund based is where the actual flow of money happens. Okay. So there will be a proper flow of money going into that place. But a non-fund based is where there will not be any actual flow of money coming in, but still that particular funding can fetch you a good amount of money to you. So that is the way how an ESOPs has got into picture, sweat equity shares has got into picture. See, if a company is granting an ESOP, actually there's some sort of a share which it is trying to give. But then there is a no money flow involved. Neither a shareholder is purchasing a share, like which is the employee, or for that matter, the company is getting a money for that particular share sold. See, it is still a non-fund based, but still there is an amount of funding which is involved, right? So that's a bit about that. We will be studying about ESOPs, sweat equity shares, as I already said. Now comes a debt funding. That is my favorite topic because I day in and day out deal with this. As I said, there are times when you cannot always give the ownership of your company to your businesses. Hence, the debt funding, right? The debt funding plays an important role. Okay. As I said, it could be for various purposes like expansion plans, merger acquisition, setting up new businesses. And there are segments which is government securities, where there is treasury bills, floating rate bonds, zero coupon bonds, various government securities.
Ma'am,
Also, sorry, am I
ma'am,
audible? Any issue?
hi ma'am, I'm not able to see the screen.
You're not able to see the screen?
Yes, ma'am. I'm following my hard copy of material, but not able to see the screen.
Okay, sorry, my bad. Is it now?
Now also the same. I'm not able to see.
Okay, give me 1 second then. For some reason, I don't know. Okay. Let me just share the screen again. Yeah. Are you able to see the screen?
Yeah, now I'm able to see.
Okay. All this time you weren't able to see the screen, yeah? Oh,
Yeah. I'm following the hard copy.
okay. Got it. Okay, fine. We did not miss anything anyway as you guys were listening. We kind of said about IPOs, private placement, SEBI, ICDR regulations, collective investments, the institutional infrastructure trust, private equity. So funding. So as I said, if you're able to, as I told already, it's a debt financing trajectory, expansion plans, right? That's a little bit about it. Then we'll go to debt funding, non-fund based. As I said, the basic advantage or a basic understanding that you should having about debt funding would be that the funds are required for the various reasons and there will not be a cash flow involved. Okay. So this is by the way of letter of credit, or for that matter, stand by the letter of credit, bank guarantees, and OD facilities. I'll give you a simple example. Imagine today you want to raise some amount of money or you want to do some business. Some person as a bank will give you a guarantee for that and you will be able to do it. They're actually just giving a guarantee. There will not be any fund flow from them. Okay. Because they're just giving a trust for your business to grow in life in future. That is where the issue comes. Okay. So that is where the non-fund based instruments comes into picture. It's like today, let's take an example. I want to take some money and not I want to take, I want to do some business. And for that, bank would or some investor would ask me, hey, you know what, you should provide me a bank guarantee who can support you. If at all you fail to pay the whatever the money that you have taken from us, there will be a bank credit which we require. So that is where the bank credits comes into picture. It's like a simple understanding that you should have is there will not be any fund flow, right? I'm again stressing, there will not be any fund flow. The fund flow which will happen will be happening at a later stage, right? Awesome. In case of default, as I said, bank person would have given a guarantee. If we default, then he should pay the money. Ideally, in the first stage, there will not be any fund. As I already said, foreign funding, we've already discussed about this. I said, just 1 second, sorry. Okay. So I already said we can get our shares listed in various stock exchanges by the way of ADR, GDRs. Even for that matter, we can issue the bonds, which is foreign currency convertible bonds, FCEBs, various things. So, of course, this is another way of funding to a company, right? Next, last but not the least, is another way where there can be a loan investment by our own, you know, subsidiaries or for that matter, our own investment companies. And we can also get certain, loans or guarantees, even intercorporate loans, commercial papers, deposit. These are the different ways of funding which we can see, right? Non-convertible redeemable preference shares. I'll tell you why this is important. You will learn at the later stage when the equity funding is happening or when I'll be explaining about the funding process. What happens in here is that they will talk mostly about the kind of redeemable preference shares that goes in and why is it important for us to issue a preference shares, because it comes with a lot of advantages. When someone is issuing a preference shares, you're ideally not giving much of an authority to them to be having a voting power, them to decide about your business decisions, but still you're getting a funding, right? So that's the kind of importance a preference share capital holds, right? Awesome. Securitization. Let me just stop sharing my screen and try explaining you this. Mm, yes. Securitization, as I said, it's a very simple concept. It's like today I have some things that I've done and I have some assets, but the risk of it that I need to transfer it to someone. Okay. The risk of, okay, I'll give you an example of an NBFC or similar to my company, right? Imagine we give the loans to people, right? And the loans that I have given will be my assets because they owe me some money, right? Because I've given them the loan, and every repayments which happens to me will be the money that I should be getting from them. So these are my assets. So what I can do is I can pool all these assets and transfer, right? And transfer it to whom? Transfer it to a set of individuals. It could be institutional investors or individual investor. They form an SPV, which is a special purpose vehicle. They get this entire amount of the pool transferred, okay? The assets that is there. Imagine I've lent about 10 lakh worth of loan, and that risk I need to transfer it to someone, and someone else is ready to earn that return. So what happens is that pool of assets I'm transferring to an SPV. SPV further takes care and transfer it to whom? To the institutional investors or the individual investor. So what happens? Imagine there's a company A which has lent about 10 lakh of worth of money, and then there is this vehicle which is SPV. SPV is the one who's a take carer. It's like a debenture trustee who handles all the entire trustee details and the trustee things, right? So he's that person who kind of handles things, and then comes to a stage where he takes care of all these assets, and then every amount what I get. So in this investors, they fund this particular SPV, and SPV further gives the money to whom? Further gives the money to us. Okay. Then all those repayments, again I'm stressing on every repayment, okay, coming. Imagine there's a 10 lakh loan, every EMIs that is coming from that loan will not be coming to me whom I have given the loan. Ideally, it should have come to me because I've transferred the asset to the investor. That comes to an SPV. SPV further transfers the amount to whom? Further transfers the amount to the investor. Why this happens, why an investor would want to go to a funding source like this is because of the higher rate of interest. That investor can earn better money than his FD. So hence he comes, he takes the risk, he buys the assets of another company. There will be an SPV, which will be a trust which will be created, who handles this, all the assets, and then further gives back the money. Of course, I'm sure if you're just new to all this topic, you would be just wondering, ma'am, what is this? Why are you telling too many complex matters? But this is yet again another source of funding, guys. Of course, I know there's a lot of complexities, technical words involved. Don't get really, head up. Don't get like bombed out by that for a fact that, hey, you know what, this is too much. We were going to really simplify this for you, right? So that's a little bit about securitization. Of course, sorry about the technical issue that happened that you couldn't see the screen. But like, well, we are here. I'm sure it's what we have learned chapter wise. We've understood, as I said, the basic structure is the corporate funding. Under that, the different type of instruments could be equity, could be debt, could be different other instrument which goes about, and then learning under each of them. This could be by the way of debentures issuances, commercial paper issuances, or for that matter, preference share capital issuances. And what are the different ways we raise the money is what is right. Now, as I said, the other three chapter, which is all about listing, is something we will predominantly talk about how we will go, what are the different regulations applicable for a listing entity, what are the regular compliances associated with it, and last but not the least is the kind of various documents and the procedures involved in the listing process. Of course, I'm not going to be, as I said, this is exactly what the entirety of the entire 40 marks. The two chapter which is given, they've said only this is for the information purpose. I'm not really sure if they're asking us not to read it, but still, I'm going to give you a little background about each of them so that you will understand when we're doing this classes, right? So that's a little bit about each breaking down of the syllabus. Whole in all, if you want to ask me, what is the syllabus includes of? It will include simply of if you are associated, put as a company secretary, what are the different ways a company can earn, or sorry, a company can raise the money from the market? be it equity, be it debt, be it various other instruments. What are the different ways it can raise the money is what you will be understanding in this chapter. Guys, again, I'm stressing on it has a lot of scope when you go out in a practical world. This is that subject which is very connected to that other subject that I take, which is sectoral audit, due diligence, compliance management. I'll tell you why. Because before any funding which happens, there happens to be a due diligence. In due diligence, what gets checked? In due diligence, compliance management, compliance system existing in the company gets checked. Hence, everything seems to be interconnected. So if at all you're taking both the modules that is there of each papers, try reading this subject and this subject together, because there are a lot of repetitive topics which kinds of makes your life easier, right? So that's a little bit about it. um, of course, I'm trying to break down into whatever the parts that I could. Sorry if there was a trouble if you're not able to see the screen. Again, as I said, technical glitches will happen here and there, so nothing like it. But here we are. We've understood the division of the syllabus. Is this problem has any practical problems, or the subject is completely theoretical? Well, I'll tell you what, it doesn't seem to have a lot of practical problems, but there are few places which talks about certain different ways when the things. But as far as practical problems, I did not understand. You mean to say if it is a number sort of a calculation, of course it is not there. But practical, the kind of an application-based questions will be too much in this particular subject. I'll tell you why is because this is very relevant and it's happening in and around in the world. So they would ask you, hey, imagine yourself to be A, you want to do this, you want to issue this particular capital, how would you do this? What are the different things associated with it? Imagine you're facing this particular issue, how would you resolve this? So everything seems to be very interconnected. So of course, you can definitely expect a very application level of questions from this. Definitely not going to be the easy one. But if you're just asking for the number problems, I don't see, haven't really seen it. But I mean the number, sorry, of the problem. No, that's fine. Valuation and all, no, because it's already there in the CRI, I'm sure it's not there. But yeah, as far as I understand, but there could be a probability that they can give. CS Institute, they can give anything. But let's make sure that whatever is there in the syllabus, we are here to understand that. So I'm going to be teaching all of that that's there in the syllabus, right? Awesome. So that's a little bit about the background. We've kind of understood how from a seed stage, from just starting, Raja just starting out his business shop, to getting into an IPO, getting listed on the NASDAQ, how the entire process happens. So this is a simple example I could have given. This is exactly how an entire syllabus will run through. Of course, there will be a legal framework for each of it, but this is a simple way of understanding how a funding or a corporate funding or a syllabus of the corporate funding goes about, right? Awesome. So we've understood syllabus division. We've understood the kind of way how it has gone to the each background and why is it important for us to learn about it. Last but not the least, what you can expect from the live classes. Guys, again, I'm stressing on the certain things that you can expect. See, Padma has been a part of my, one of the participants in this live session has been a part of my student. She's attended my secretarial audit classes. There's something that, you cannot, you can definitely expect from us is that continued association. I've already told the same even in the previous, this thing also, this session also, is a continued association is something that you can look forward. That is one. The second thing is we are more happy to look into, we are more happy to give questions, uh, you know, question papers, analyze your papers, analyze the way you've written your answers. That is another thing. The third thing is that there will be a support which will be there with you. So hook a crook here and there. I'm sure it's very common for all of us to be going through certain difficult times when you get like really hecked up and all of that. That will not be there. So I'll promise you on that. So there will be certain things which will be definitely there. So all this is a part of a things, right? So that's a little bit about what you can expect from the classes. For sure, you can expect certain notes. Has this particular, sessions, or for that matter, this particular second batch of what we are doing, what we're trying to do for CS professional. It's gonna be sorry, my bad. It's gonna be very more practical based approach. So there will be certain notes and there will also be certain level of application based questions that you can expect from us so that you're well acquainted, you're well put out to go and write your exam. So this is all that you can expect from our classes. As I said, the subject that I'm taking, which is sectoral audit, due diligence, compliance management, is very well connected to this subject. So if you're taking that module also, try attending that session also. It's because everything seems very well connected, so you can incorporate yourself and study in a better manner, right? So that's a little bit about what you can expect. I guess I've covered everything that I promised you to be covering. Of course, sorry for that technical glitch, what happened to be for that, whatever that last 10 minutes, what we faced about now my screen not being able to be visible to you. But that's okay. I don't think so. We missed a little bit of that much. I was just trying to mark the syllabus. Anyway, you would have the syllabus with you. You can always go through it. So that's an understanding that I wanted to give in this section. And that's a little bit about how this entire syllabus is being framed into, right? If you have any questions, put out in the chat section. Or otherwise, I'm super happy to see you all on a Sunday afternoon. Of course, few people could be seeing this from a different parts of the world. That's a different thing. But thanks for taking a time out. And I'm just going to wait for like a minute or so. If you have any questions, put out your thoughts in the chat section, or you can always write to us in the comment or even chat to us in the WhatsApp. And if at all, guys, again, I'm stressing on if you feel you want a complete support, if you want to feel that, hey, today I'm going to be equipping myself with the funding. I'm going to be equipping tomorrow if I'm going to be going and learning this doing this in a more practical scenario. Nothing like it, guys. Please, try, seeing this subject in a more practical way, because this will be there in you, or this thought process or this kind of an understanding will definitely be useful for you when you go in a practical world, right? Awesome. With that as a background, if you think this particular session has been useful, put out that like, hit us to us in the description. You can always chat to us or like reach out to us to the WhatsApp number that's given in the description and tell us that you want to join these classes. Then I can see all of you who are you interested with and join my class, right? Awesome. So that's a little bit about the entire thing. As I said, like a minute or two, I'm just going to wait. If you have any questions, put out. Otherwise, I'm good. We are fine, and then we can end the session. Yeah, it was really nice to see all of you. Thank you. Thanks, Padma. Thanks for giving your feedback. I'm glad I could be of some sort of use, and could be helpful to you in understanding the syllabus and the subject as a whole, right? So that is what you can expect from this particular class as well, whosoever is seeing at a later stage as well. So it's amazing to see all of you guys here, and I'll see you around. And till then, have a great weekend, right? And have fun, and we'll meet you soon whenever we have classes. So for us, reach out to that number and tell us that you want to subscribe and tell you want to attend this class. Yeah. Thank you.